Hey there, everyone! Welcome back to our channel, where we simplify the complex world of finance for you. I'm here to discuss a topic many investors grapple with. Can I write off investment losses on your taxes? If you've ever found yourself wondering how your investment losses might affect your taxes, you're in the right place. Let's unpack this concept together so you can make the most of your financial journey. So, here's a key question to kick things off. What exactly are investment losses, and how do they impact your tax situation? First things first, let's clarify what we mean by investment losses. When you sell an investment for less than what you paid for it, you incur a capital loss. For instance, if you bought shares in a company for $1,000 and later sold them for $600, you have a capital loss of $400. Now, here's the good news. The IRS allows you to write off these losses against your capital gains, which can help lower your tax bill. If you made $1,500 from selling another investment, those losses can offset that gain. So, in our example, your taxable gain would reduce from $1,500 to $1,100. But what happens if your losses exceed your gains? Well, the IRS has a rule that allows you to use capital losses to offset ordinary income. This is up to a limit of $3,000 per year for individuals, or $1,500 if you're married filing separately. This means if you had a total capital loss of $5,000, you could deduct $3,000 in the current tax year. The remaining $2,000 can then be carried forward to future years, providing ongoing tax benefits. Let's break this down with a simple example. Say you're a single filer who sold several investments this year. You made $2,000 in gains from stocks but lost $5,000 from some bonds you sold. So, you take that $2,000 gain and subtract it from your $5,000 loss. That leaves you with a net capital loss of $3,000. You can write off that full $3,000 against your ordinary income when filing your taxes. Now, let's talk about the specifics. How do you report these losses? When you file your taxes, you'll use IRS Form 8949 to report your capital gains and losses. This form requires details like the asset description, acquisition and sale dates, sales price, and original purchase price. This form will help you calculate your net gain or loss, which you'll then transfer to Schedule D. Schedule D summarizes your total capital gains and losses, helping determine your tax liability or deductible losses. It's important to keep records of your transactions, receipts, and any related documents. If you held the investment for over a year, it's considered a long-term capital gain or loss. These are typically taxed at a lower rate than short-term capital gains or losses, which apply to investments held for less than a year. Now, you may be asking, what if I don't have any gains to offset? In that case, you can still deduct up to $3,000 against your ordinary income. That's money you earned from your job or other sources. For example, if you made $50,000 in income and incurred $5,000 in losses, you can deduct $3,000 of those losses. This would reduce your taxable income to $47,000. The remaining $2,000 can be carried forward to the following tax year, continuing to provide tax relief. And here's a crucial tip: always be mindful of the wash sale rule. This rule states that if you sell a stock at a loss and then repurchase the same stock or a substantially identical one within 30 days, you cannot deduct that loss. Essentially, the IRS wants to prevent investors from creating tax-deductible losses while still holding on to the same investment. To recap, yes, you can write off investment losses on your taxes. They can offset capital gains, and if your losses exceed your gains, you can deduct up to $3,000 against your ordinary income. Just remember to keep good records and be cautious of the wash sale rule. If you found this video helpful, please give us a thumbs up and subscribe for more financial tips. And if you have any questions or personal experiences to share about investment losses and taxes, drop them in the comments below. We love hearing from you. Thanks for tuning in today. Until next time, keep investing wisely and take care.